Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I will also be ceasing coverage on several names as well. Do check them out towards the end of this video. I've put in timestamps, so please use them to skip to the names that interest you. I updated on Medtronic in a video on the 13th of September and noted to stay bullish because it had managed to hold above the neckline for 5 consecutive weeks. Last week, Medtronic bounced off the neckline over here and rallied and reached a high of 99.37. Closing above the psychological resistance at 100 is expected to give Medtronic an upside boost. The textbook target of the head and shoulders bottom is at 115.51. I will begin coverage on the S&P 500. I believe that it has completed a rising wedge in its latest session close, and this bearish pattern has a textbook target at 6,479.39. Note that the RSI previously was already showing price momentum divergence, suggesting a near-term reversal. So I'm now technically bearish on the S&P 500 and will view rebounds to be corrective in nature until it breaks back above the resistance trend line. Note that if the S&P 500 closes below the Ichimoku cloud, let me show you where that is. For here, if the S&P 500 closes below the Ichimoku cloud, then the downside bias will be stronger and we should expect further downside and not just limiting to the textbook target of 6,479.36. I will begin coverage on Alphabet, the parent company of Google. It had just completed a bearish pattern, a cup and handle top, after closing below the support at 238.61. I'm technically bearish on Alphabet and the textbook target is at 221.27. Note that there was a gap up on the 3rd of September. Now my approach towards gaps is that they are usually, but not always, fully or partially filled. So there is a risk that Alphabet actually falls to a low of 211.68 to fill this gap. Rising above 251.32 will invalidate this bearish pattern. Moving on to a few names that I will no longer be covering in future videos, starting off with LVMH. I will cease coverage on LVMH. I started covering this name on the 7th of July and said that it had completed a falling wedge, a bullish pattern that has a textbook target at 571.8. LVMH reached 100% of this target last week. I will cease coverage on Coreweave. I turned bearish on Coreweave on the 25th of August, stating that it has completed a cup and handle top. This turns out to be incorrect as Coreweave rallied and has since closed above the cloud, risking invalidation of this bearish pattern. I will also cease coverage on Chagee. I turned bullish on Chagee due to the completion of a falling wedge over here on the 15th of August, but this bullish pattern did not perform as expected. Chagee has since fallen to a new low, and I will now deem this bullish pattern to be invalid. I will also cease coverage on AMD. I turned bearish on AMD due to the completion of a head and shoulder stop, but price action has since jumped and invalidated this bearish pattern. Just to add, I expect AMD to be lower first in the upcoming sessions. 2 reasons why. First is that you can see that for the past 4 sessions, AMD has overextended above the upper Bollinger, and reason 2, there was a massive gap up on the 6th of October. I expect gaps to eventually be partially or fully filled. That means there is potential for AMD to fall from here to here, which is about 170.68. Last but not least, I will cease coverage on Deckers Outdoor. I highlighted the potential formation of a double bottom, but price action has developed in such a way that this no longer fits a bullish pattern. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.